we'll be learning from Javier about how business owners can use Keyman insurance, buy-sell agreements, and other insurance as tools to allow their business to continue in the event of death or disability of a key person.
So yes, Keyman insurance is so important that a lot of small businesses, even large businesses, utilize or do not utilize. The people who don't utilize or have talked about Keyman insurance with their insurance agent or financial planner are losing out, possibly causing problems down the road. Let's say, for example, you and I are business owners, partners, okay? Keyman insurance means it's going to cover a key person. Okay, now we have employees. We have 20 employees. But you and I started this. We have the sweat equity in the business. Okay, we breathe and sleep all day long, all night long about our business, how to make it better, how to make more money, whatever it is. So we have a lot of sweat equity into the business, and we need to protect ourselves. Because you know what? Something happens to everybody, anyone, anytime. Car accidents, sudden heart attacks, things like that can happen. Your world falls apart. Not only your business world, but your family world, right? So let's say, for example, something happens to one of the partners and they pass away. If you don't have Keyman insurance, it's going to be very hard for you to survive the first 90 to 120 days because you're scrambling. Who had appointments with you or me during that period of time? We had to cancel them. And if we cancel them, we look bad because we don't have somebody as a backup to fulfill the appointments or the orders of the other person committed to. Okay? So that hurts our business. But if we have money coming our way, we can float our business until we find a replacement. Because when partners get together, they have a common vision. And not everybody will carry that on. And that kind of leads into buy-sell, because Keyman and buy-sell go together. One of us passes away. Now, the other partner is in business with a spouse. And the spouse was never in the business, never came on board, never supported it really sometimes, okay? That happens. So now you're in business with a stranger. Now, that person may not know anything about the business and just wants to get out. Great. But how are you going to fund that? Without a Keyman policy or a buy-sell agreement, that's kind of murky waters. How much is the business worth? How much should you buy her or him out? Okay? That's very important. And that's when you set that up in the beginning, buy-sell agreements through your operational agreements of the business. So let's say the dollar amount set year one, and in 5 years it escalates to 1 times 4 or 40% and additional value of the business. And then the insurance policy will kick in. Here you go. Here's your check. Thank you very much. Give me my equity back to me. Now I'm 100% owner instead of being 50-50, right?
Right.
That's very important. We had a case study. It's been about a year and a half now. I went in there with my people and we talked to the owners, the 2 partners, the wives, and their key people about setting up a buy-sell agreement and a Keyman policy. They loved it. They wanted to wait a few weeks because they were going to go on a trip to Las Vegas, like a second honeymoon. So, okay, we were accommodating. Fine, we could wait a few weeks. During that 2.5 week period, the key person of the business developed COVID and died. So we were going to have $1.5 million of insurance on that person. Now it's gone. The opportunity was lost. So now there's a struggle within the policy, within the company. The wife's involved, which she never was involved before, with the remaining brother, who is now supposedly 100% ownership. However, she's not willing to abide by an oral agreement between the 2 brothers. Now, we did find some documentation that allows the transition, but there's no funding for it. So now the brother that survived is going to have to sell the business to her or buy the business from her at an escalated current value. but there's no set dollar amount, there's no funding vehicle, because that life insurance was never put in place.
Right.
So those are kind of the dangers that you're trying to avoid by having an agreement, buy-sell agreement, and also having Keyman insurance.
And so I see that's how they really go together, is
Yes.
the Keyman Insurance funds the buy-sell agreement, basically.
Yeah. Now, if you want a Keyman insurance for your sales manager, let's say I was your sales manager for the life insurance division of your company, okay? And I had a record year the year before, a good year last year, and we're projecting even better for this year. And because of relationships that I've developed, I'm pretty key to keeping that going.
Mm-hmm.
So most employers will say, well, you know what, JVR, I'm going to buy a policy on you based on the last 3 years of average sales that you brought in. Maybe it's $350,000. So it gives us 1 year of recovery time to find your replacement.
Mm-hmm.
That's important.
Right, I see.
Because all of a sudden, I'm no longer here to help run the marketing or the underwriting. And now you got to find someone that, again, you can trust with your business,
Mm-hmm.
who might be not as qualified or maybe only partially qualified.
Yeah, and I can see that it makes sense. You're paying small premiums while they're there working as an insurance policy, that if something happens to them where they no longer can contribute, and you know that's going to impact our profitability materially, and it'll take some time to probably find a replacement, then maybe that's a smart thing to invest in those small premiums while times are good, while they're producing well, as an insurance policy, that if something happens to them.